Good evening, everyone. Welcome back to the channel, to this scheduled live stream with me, George Ross, Retro Reselling, and we have Aaron Patrick, a reselling accountant, fully qualified. Let me just pause that. So basically, I get questions literally on a daily basis, all about accounting, bookkeeping, things like that. And obviously, I can't personally give advice on that. So the perfect guest on today. So chuck your questions in. We've got a live chat on YouTube, Facebook as well. And the debut of memberships as well. Memberships, I think they're in green here. We've got the Dave in. Let's have a look. Evening, Dave. I saw a couple of others as well. LB Retro. Hey, Bill. So yeah, I've got a couple of questions ready for Aaron. I'll let him introduce himself in a minute. And then if you've got any burning questions you just want answering, I'm not sure on, whack him in the chat and we'll get through them. So first of all, let's welcome Aaron. Do you want to introduce yourself?
Yeah, thank you very much. Hi, George. So, hi, everyone. So, my name is Aaron Patrick. If you've not seen my little YouTube channel, then it's all about QuickBooks. And I own an accounting practice called Boffic. So, if you do have any accounting needs whatsoever, don't be afraid to come and say hello to us. But on the YouTube channel, it's all about trying to give as much advice to reselling and other bits about QuickBooks as possibly can. And I'm also reselling myself, as George said. So I tend to sell mostly as kind of high value electronics. So I like my drones and my cameras and all that sort of stuff is where I normally aim my stuff. But during lockdown, I've not been able to source any of that. So I've got into Pokemon cards at the moment and seeing how far that gets me. So we're hoping that we get a big rush of them coming soon.
Yeah, like I said, the perfect combination of being an accountant and a reseller. So you know everything we have to deal with, what we have to sort out and things. So perfect. Let's crack on, shall we? My number one question I get literally twice a week, maybe more. Obviously, we go to boot sales and it's cash. How do we do that as expenditure or put it down as expenses, show HMRC that's what we actually bought it for and put it down on our tax return?
Yeah, and it's rightly so that question gets asked so many times. It's not always just at the at the boot sales, but also it could be Facebook Marketplace. It could be all sorts of places where you're ideally going to be paying cash. And I know less likely now with COVID. Most of the time, people are wanting PayPal, but you're still going to have the odd cash transaction here and there. And when it comes to paying or trying to show anything on your tax return, if we're going to give the honest answer by HMRC or what they would like you to do, is they'd like you to go up to every single boot sale person and go up to them and pass them or ask them to do a receipt for you. Obviously, that's not going to happen, and there's no way that there's going to be an opportunity for them to go around and put your receipt for every 50p that you've spent or whatever it's going to be. So what tends to happen, or what I would recommend and what we've spoke to HMRC about, is just making it so that you can give as much proof about what that item is as you possibly can. And the tools that I use for that, first of all, you've got a mobile phone, so you can take a photo of it. So that's always going to be one of the things I would highly recommend you do. If you're going to say that you've spent 100 quid at the boot sale or whatever it's going to be, at least have a photo of it to use as proof that that's what you spend that money on and that's what you put it to. I also really like putting a duplicate book as well. You can get these really cheap from eBay anywhere, from your local or WA Smiths or whatever it's going to be. And what I tend to do with this is I write down exactly what it is I've bought, and I put this next to that same photo as well. And then you can reference it up. So, I went in and I went and bought an item from the boot sale. I then put it there. I took a photo of it, and you're starting to kind of build this little picture, if you like, of what it is that you've done. The final tip I can say as well is try and relate it to when you went to the cash machine to get that money out. If you've got, if you're on the way to the boot sale and you went and you got yourself 150 quid out there and you spent 100 of it, that's a really good way of indicating that that's what you spent that money on. So try and just put as much of an audit trail as you possibly can. That idea of just taking a photo, having that duplicate book is just one way of being able to give yourself some form of proof. And what I tend to do at that point as well is just put details on there that can be useful. So the date, the boot sale you went to, that sort of things. You don't need to do line by line by line by line. I don't think that'll not really benefit anyone. Yeah. But having those transactions there, I think will really help.
Yeah, so like for example, I buy literally a boot full at the boot sales during peak summer. So would you suggest to say I bought, for example, 40 items, all different, like trainers, electronics. Would you log that all as one lot, like £400, say, or like I bought these trainers for 5, here's a picture of them, next one? Or is that okay, one bulk load, like one picture, one transaction?
Yeah. I mean, you're going to be relating it to when you went to the cash machine most of the time, aren't you? You're going to relate it to you went to the cash machine, you withdrew 200 quid for that boot sale, and you spent X amount of it. So I would just have it as one big bulk. You've got this one big bulk, you spent that money on it. You're not really going to have any benefit from going down item by item, unless unless your records for your own personal uses, you've got those, how much you spent on each one. But just having that photo of it and having that proof of it is something that sorry, dog's having a having that photo and having that proof is just something that is just going to back you up, because HMRC themselves, they'll see that you've had these expenses. They know your business needs to buy something. They know there has to be some form of expenditure relating to it for you to be able to sell it on. You're just providing some form of proof and the photos as much as you can do in those situations. So make it easy on yourself. And I know you use QuickBooks, don't you, as well? So just use that photography element on there to get it straight in. Take a photo of it. Again, if you have got some sort of duplicate book as well, that's always a real nice added bonus, because you kind of put in the dates and the place and everything else, and you put in some more kind of thing to it there. So take a photo of your boot once you've done, put the duplicate book in there, put a little bit there so you can reference it up, take a photo of that boot, and then put it straight into QuickBooks then, or whatever software you're using at that point.
Yeah, I think people definitely panic a bit too much, especially when they first start out. They think like every item needs proof and everything one by one. Yeah, but it's not really necessary.
No, I mean, the only time it could get a little bit more complicated is if you're VAT registered. And even then, it's the same principle. You've just got to be careful the way that you put that into transaction, because there's VAT schemes and all sorts that can help you. So when you're VAT registered, you have a slightly different route, but it is still the same principle. Get as much proof as you can, relate it to some sort of you taking money out of a bank, and then make sure you've got a photo of those transactions to put with it.
Cool. We might come on to VAT a bit later, but we'll stay with the beginner type stuff. So we sort of logged it all, but Greg says here, if he was to buy an item for £10 from an antique fair and couldn't therefore sell it on eBay, later donating it to a charity shop, could I claim it as a loss on my tax return? And I guess this is what's it called? Cash basic cash. What's it called?
Yeah, so cash basis versus accrual, isn't it? Yeah. Yeah. So basically, the simple answer is that you've just bought an item with your intention to sell. So you can then put that in as a cost to your business. So the fact that you've got it in there as a purchased item, you put it in your cost of sales figure, means you're already claiming for it. You don't need to do anything else. If you think about, if you run your tax return at that point, and that's the only item you had in there, you'll just have that one £10 item in your purchases, which would make you a loss. So you don't have to do any other transaction whatsoever. The fact that you've included it in the first place is enough to claim, quote unquote, claim a loss on your tax return. You're reducing the amount of tax you want to pay. Obviously, the idea was to sell it and move it forward, but unfortunately, at that point, you don't have the chance. So no, you've already got your quote unquote benefit for it.
Good answer. We have a membership question here from Frolic Forever. Instead of listing every sale in software, is it okay to do a monthly amount of sales and upload the report from eBay as evidence? I guess you could go even further and say, could you leave it once a year? But I guess I don't recommend that. But,
yeah, the problem with leaving it once a year is, especially with eBay's new managed payments and everything, they're a bit finicky. The reports, they keep changing the reports that have been done and everything else. But yeah, monthly is absolutely fine. There's no problem whatsoever. And especially because one thing that gets missed a lot when it comes to reselling and how they do their bookkeeping is this whole idea of grossing up your income. So if you think about it, if you just connect your bank account and you just put in the transaction that hit your bank account, that's not a true reflection of your sales, because you've got the eBay fees and maybe PayPal fees if you're not on eBay managed payments. So this whole monthly amount and monthly upload is definitely something I would highly recommend, just so that you at least account for that grossing up of the sales and you're bringing those sales up to the true figure. It's not the biggest end of the world if you're if you really small, it's part-time, and it's not the end of the world if you don't gross up all the time. But I would highly recommend you do get into a rhythm of grossing up, especially if you're close to that VAT limit, because it's that gross figure of sales that determines if you're over that VAT limit or not. So it can be really important at that point.
It can indeed. And then we got pre-owned, pre-loved, obviously. No, not. What's the maximum profit you can make before declaring yourself as a business? Cheers, Dan.
Yeah, this is a question that we get so much, and I did a whole video topic on it this week. But the whole premise of this is that it doesn't really matter how much you earn; it's about your intention. So if you intend to go out to buy some items and then sell them items for a profit, then at that point you've created yourself a business. Now, the whole idea of when you have to declare it, not declare it, and all those sort of things, there are certain thresholds that HMRC give you in terms of ways in which it can make your life easier. So one thing I would always say, that if your intention is to buy and sell, first thing to do is just tell HMRC. What that will do is that will give you or give them the opportunity to decide if you should do a self-assessment tax return or not. If they tell you to do a tax return, then you then have a choice to make at that point. So at the end of a tax year, you'll have all the way to the 31st of January to complete this tax return. Now, when it comes to sitting down and doing it, you can total up how much income you've had in that year, and income is the top figure, so the sales you've made in that year. And if those sales are below £1,000, then technically you don't have to include it on the tax return. So that's where this limit gets thrown around a lot. This £1,000. If I earn over £1,000, I'm absolutely fine, and that is true. But one thing I would highly recommend you do is be in a position where if it's over £1,000, you can include it. But if it's under £1,000, you don't have to include it. Far better position to be in than you total up at the end of a year, realise you were over £1,000, haven't told HMRC, therefore there's potential you could have late tax returns and all that sort of stuff that could get really, really nasty. Yeah. So the best thing to do is, if you are intending to sell, then tell HMRC, tell eBay, make sure your eBay's onto the new onto a business account, that sort of stuff. Get all that sort of stuff in line ready. And then again, if you don't make £1,000 in a year, then there's no need to include it on a tax return. But if you have, you've already got the mechanism to declare it and make sure you don't get any penalties.
Yeah, definitely. Because I always get that as well. Like, as long as it's below £1,000, but that's not profit, that's just income for the year, which obviously isn't that much when you're trying to obviously make profit from buying items. But yeah, that's why I'd normally tell people, just if you're intending to make money on purpose, then yeah, just tell them straight away, and then it's out of your mind. Like, you don't have to worry about late fees or anything like you just said.
Yeah, and eBay's got a bit more stricter as well. So again, I don't know how much people know about this, but I've had contacts and people who have been trading as a personal account and now have had their account suspended because eBay has deemed them as a business. So now they've got to go get a UTR number, get everything set up. They've got to pass the UTR number until their account can be unfrozen again. So it's just not worth the risk.
Yeah. But Adams came in about how do we prove the purchase cost. If you skip to the start of the live, that was the first question. That's the most asked question. But basically, use QuickBooks, take a picture, evidence. Go back 10 minutes, and we do cover that. But yeah, you actually mentioned it as you came on before we went live. I was at eBay Managed Payments now, and actually this week, even though I signed up August last year, I had to obviously prove who I was in that. This week they asked again for a tax statement from me and my driver's license. Yeah, even though I've already done it. So yeah, they might be cracking down maybe on private sellers selling as businesses. So I know people do that. They sort of play with that. I always recommend don't do that. But from what you said, they might be cracking down on it. It seems you might lose your account because of it.
Yeah, it certainly seems it. I mean, I think the sanctions they put originally was that they weren't allowed to list. So it's not like, it doesn't seem like it's the end of the world. But obviously, if you can't list, then what's the point of having the account? But what they seem to do is restrict you to not being able to list. And also, if you do more than the VAT threshold, so 85 grand, they've been restricting you then as well. So yeah, it seems like, and I think it is all down to eBay Managed Payments, because the way I spoke to HMRC about this sort of stuff is about the fact that now there's joint liability. So it's not just the reseller, it's eBay as well. So if you are not doing what you should do, it's not just you that's at risk, it's eBay themselves. So I think eBay managed payments becoming more strict is just something we've got to be more careful about.
And Frolic Forever said, I heard that HMRC are working closely with platforms to stop this happening. So yeah, maybe that's even more evidence that, yeah, if you're acting, well, your account's private, but you are a business, maybe consider changing it ASAP. Yeah, the work, because if eBay don't want a tax bill all of a sudden, or if they get fined, they will crack down on it.
Yeah.
There was, this is one I get as well. Is it correct? It's better to go limited company if you work full time, PAYE.
Yeah. So straight off the bat, if you go limited company, you are technically in a better position for tax in the first place. So if you go a limited company, there are ways in which you can make your tax bill less. The problem is, from an administration point of view, from a cost point of view, from every other point of view, it is more expensive to be a limited company. So if reselling your only form of income and it's a reasonable amount, you might be better off just from terms of kind of keeping it nice and simple to just stay as a sole trader. If though you are doing it part-time, then the problem you've got there is that your personal allowance has been completely utilized. And what I mean by that is how much you're allowed to earn in a tax year without being taxed. So if you've already got a full-time job, then that means that all of your taxable allowances have just completely been used in that PAYE. Therefore, everything you earn, you're going to be taxed on. And depending on how close you are to that higher rate bracket, depends on how much you could be taxed on. And it can get really, really nasty at that point. So yeah, if it is your part-time role and you've got a really nice PAYE job and you've got a really successful reselling, then at that point I would highly recommend looking at going limited. It will save you so much tax. It's unreal.
Yeah, and this seems very well linked with what you just said. Because I work full-time and do eBay, I'm worried about hitting that 40% tax bracket. Is it different because one is a self-assessment, the other is direct from employer? Or do they both tally up together? Yeah,
exactly. They both tally up together. So when you hit that higher rate tax, then basically all your reselling income, or profit, should I say, at that point, will all become that 40% tax bracket, which is going to be really painful. Well, that also means is you're probably going to force yourself, or you potentially could force yourself to hit what's called payments on account as well, which means it's doubly painful for you. The beauty of being a limited company means that it doesn't matter how much you earn, from £1 to £6 million, it's always the same tax rate as 19%, so it's much lower than 40%. Now that could change with everything that's going to go with COVID and everything else, but as it stands, that's such a huge saving from 40% to 19%. You're halving your tax rate, you're halving the amount of tax you have to pay over. And also with a limited company, you won't be taxed if you don't take the money out. So reinvesting and bringing the money in and everything else means you've got a benefit. Whereas as a sole trader, everything you sell in a particular year, you have to declare on your tax return, you have to be taxed on it.
Yeah, I don't know if you're a mortgage advisor at all, if you know anything about this, but apparently a limited company is better than sole trader if you want to pass your mortgage or finance, etc.
So I'm not a mortgage advisor. I'm not allowed to give mortgage advice, but I do work with mortgages day in, day out. Mortgage advisors, should I say, day in, day out. And basically, they at the moment, through the fact that with lenders and everything, they're really, really scared. So because of that scariness of what's going on with uncertainty and everything else, they are tending to be more acceptable of a limited company, because limited company, you're declaring everything, it's all going to company's house as way of auditing it, and all this other stuff that goes with it. So they do tend to be more or they are at the moment lending more to a limited company because of that. And sometimes that can also mean you get preferential rates, and there's all sorts of things. But then in this day and age, we're finding it really difficult for people to get mortgages who aren't PAYE. So it's I bet you're in the same boat. Yeah,
that's what we was hoping to do this year, but it's probably next year's problem now. And they were asking, like, when we was applying or like seeking advice, they wanted 3 years, obviously, of my take-ins and things, and they can average it out. But they're very reluctant to, or nervous. But
it's crazy.
Yeah. There was something linked with that I was going to say. With uncertain times, I was going to bring this up. Obviously, the government have kindly helped with furlough and things, and self-employed, the grants. Question I had personally, they always say about make sure you have proof. Can you go into more detail about the self-employed grant for me and everyone else?
Yeah, so for people who aren't aware, the Self-Employed Income Support Scheme grant, there's 3 that's already been paid out. So if you have already claimed that, one of the things I'd highly recommend is make sure you record the fact you've claimed it, because that's going to have to go on next year's tax return. So don't forget that. That's going to be a big point, and HMRC will be looking for that to be included on there. But there is still a 4th grant to pay, so that's going to be due, or we expect that to be in the next couple of months. So we think it's around about March time, something March, April time. They haven't exactly said what the criteria or anything else is, but the rumours are that that'll be based on the last tax return you've just put in. So you might see that it's changed. Now, the only questions they asked when it came to your what should you apply for it or not was basically, have you had any adverse consequences because of COVID? That was literally all they asked you at that point. Now, there's no kind of set, this is the proof you need to show, and this is what it is that's going to prove that you definitely have or you definitely haven't. But it is a case of they're going to be doing some sort of assessment based on what you submit on your tax returns. So they expect your tax return to have a slight dip and go through from there. And then they'll be able to kind of make an assessment from there. If they do kind of warrant that it needs to be paid back or anything daft like that, that'll be in a future tax return way down the line when they've kind of got that information. One of the things I would say, though, is I know a lot of business that I work with where even though their turnover hasn't quite dropped, their whole business has fallen apart completely and their profits has fallen, or their turnover has dropped massively, but their profits has kind of stayed the same, but they're still adversely affected by a lot of different factors, by not having to employ or whatever it's going to be, having to make redundancies or whatever the issue is. So from what we can tell, most people are going to be able to put some sort of case together to say they were adversely affected. So yeah, I wouldn't worry too much at this point. It's generally when it first hit lockdown and when everything was going, then my advice to people was to just try and make sure you get whatever grants you are entitled to, because at the end of the day, the best thing for you to have at the moment is cash, because cash is going to be so important to us as things continue and as everything goes on. So getting yourself the cash is the best thing. You know, the bounce back loans have been an absolute godsend. I highly recommend people look into them. You know, interest free for 12 months. Have that money in your back pocket. If you don't need it, you just give it back to them, no penalties whatsoever. But just having that there as a safety blanket is so important. So yeah. I highly recommend jumping and try and get them. If you've been adversely affected in any way, make sure you get what you can just so you can survive it.
Yes, I was like dithering because as soon as you go to apply for it, they're like, make sure you are adversely affected. They don't go into any detail. Make sure you got proof, no detail. And especially January, I was definitely affected. So yeah, it's good to know that you shouldn't worry too much. And
because you know, you've got so many different factors. The fact that you've had to homeschool, the fact you've had to do, you know, there's going to be adverse factors. You've said it yourself. It's like, you know, even though you're a quote unquote full-time reseller, you're only doing part-time hours because of everything that's happened, and you know, them sort of things take into account.
Yeah. Yeah, going back to sort of more of the basic thing about expenses. I can't see it on the screen yet, but Adam David has said, I don't have a separate office, but registered and limited company. I do my packaging and everything else at home. Kind of put some of the costs like rent, electricity down as expenses. I guess that can go towards like self-employed people like myself as well. What can we actually do to work from home, like electricity and things like that?
Exactly. Yeah. So the key thing here is about you understanding what the risk of you putting that expenditure in. So HMRC have given out what's called the Small Business Simplified Expenses. And the whole point of Simplified Expenses is they say to you, here are the rates we will never argue with you. And one of those rates is for what's called use of home. And the idea then is that if you're using your home for any type of work related, so even as me as just an accountant, I could claim for it, or a butcher who has to go home and wash his apron or do his bookkeeping, or basically any part of the work that you do at home. So in this case, about actually doing packaging and everything else that comes into it and storing everything else, then HMRC would want you to use their rates that they put on the website. Now, they're really easy to find. You just go to Google, Simplified Expenses and use of home, and they'll pop up. The problem is they're really low. So the maximum that can be claimed is £312 in a year, which compared to how much it costs to run a house is, it's a pittance in comparison.
Yeah.
So the other option is to basically, there is a calculation of what your use of home figure can be. My one kind of thing I'd advise against that is basically HMRC has put this, the simplified expenses together. That's what they will accept, no questions asked. When you start putting a different value in, then they're going to be asking, well, how did you come to that value? Because the rates they kind of expect you to do is how many rooms are in the house, what the cost of living there is, so the rent and electricity and everything, divided by the rooms, times by a percentage of all this. Basically, HMRC will pull that apart, trying to find the bits and get to a figure that they'll be happy with. So you've got that to contend with. The other thing to worry about, and it's not so much if you rent the property, but if you own the property, if it's your house, then technically when you come to sell the house, you could taint that part of it, and you could actually have to pay taxes on selling the house. Whereas normally when you buy and sell houses, your own property, there's no taxes to worry about.
Okay.
So they're the two considerations you've got to be careful of. A, could they come back and argue with it and then start looking at investigations and inquiries and all that rubbish? It's not worth the headache. And two, when you come to sell the property, there's a potential there you might have some really nasty taxes to pay then, which you would just completely eliminate all the benefit you've had up to date.
Oh, wow. Well, I didn't know that either. How about expenses away from the home? Is there sort of a common mistake people make? I know there's a rule with food. You have to be a certain mile away from your home or where you're working from and things. Is there a limit to business mileage, things like that?
Yeah, so I mean, the big expenses that people can put in there, they've said it there, mobile phone, it's a huge one to put in, because the best thing to think about, or the key rules when it comes to expenses, the first one is, does that expense relate to sell-ins? Because that's the only kind of test that really matters. If you have an expense that relates to you selling an item, then at that point you've got an allowable expense, as simple as that. Because the whole litmus test is, if I sold something and I incurred an expense to get there, then it becomes a business expense. Though the other thing you have to remember, though, is that HMRC have this horrible tax system called P11D. Now, it doesn't really affect sole traders. It's more about limited companies. But a P11D is, if you take yourself out of having your own company and you worked for someone else, and if they gave you a car, that's the most common one, and if they were going to give you a car instead of salary, then HMRC want to tax you on the fact you're getting a car instead of salary. So they create this tax called P11D. And basically, if any of your expenses that you relate to fall foul of P11D costs, then at that point, you just want to stay completely away from them. They're just not worth your hassle. They cost you as a business owner more than it would to actually have the item itself. So what happens there is, for those kind of costs there, mobile phone has no P11D, so definitely throw that in. That is a great cost. Put all of it in there. Technically, maybe a percentage, but it's completely up to you on that one. If your partner helps you in any way, put her phone or his phone in there as well. If you've got any sort of cost like that, they're the easy ones to put in there. Technically, your internet at home, it's less of your use of home, so you can definitely put a percentage of that in. That gets really well. And if you do stay overnight accommodation and stuff like that, as long as it's for business use, then you're absolutely fine to put them in. When it comes to your mileage, put as many miles in as you want, and I'd recommend mileage over putting a vehicle in on most situations, because of this P11D. And the only thing to remember there is that you pay yourself 45p for the first 10,000 and then 25p after that. And as long as you keep to the rules, you'll be absolutely fine.
Nice. Going back to the grant, tea cakes. So can I claim even though turnover and profit is up on the grant?
Yeah, again, it's about have you been adversely affected in any other way? Because even though your turnover and profit may be up, is it that, yes, it's up, but in comparison to what you should have earned this year, and did you have a really bad year the year before? It's those sort of questions you want to be doing. So, you've got to be able to have some sort of argument in place to say that this is why I was adversely affected. The 18-19 year was a particularly bad year because of XYZ or whatever it needs to be. And this year it should have been a better year, but then I was struggling. And it's those sort of arguments you need to be put together.
Okay. It's reassuring. DM music that says better off not working. All this tax malarkey. Right. Should we move on to the dreaded VAT? Now, in your recent video about myths and things, you actually touched on this about you shouldn't really be so scared of VAT. I'm getting near it. Maybe a year or two away, I might hit it.
Yeah.
Should I really be that worried? Is it going to affect me that much?
See, one of the benefits of being a reseller is there are schemes out there to make it as easy as we possibly can, in terms of the impact. Because unfortunately for the reseller, the problem is it's all about the sales price. Whereas any other profession, or most other kind of businesses out there, you can kind of get away with buying it or selling an item and then adding VAT on top because it's kind of accepted, isn't it?
Yeah.
You go get your mobile phone contract, you're not going to negotiate them on the VAT on it. It's just you accept that it's going to be there.
Yeah.
So most professions and businesses can get away with it, but as reselling, it's all about that selling price. That selling price is always going to be key. So you're not going to be able to suddenly go and just add 20% on and carry on as normal. It's not going to work for you. So you've got to find that bit where you actually, as much as possibly, you want to be smashing through that limited company or through that tax VAT threshold as much as possible. One thing I have been kind of telling people is a bit of a get out of a jail free card, and you can only use this once, is if you are just about to hit that VAT threshold, do think about just creating a limited company, because technically then your VAT threshold starts from nil again. So technically you can then build it back up. That's kind of a one little get out of jail free card. And the reason for that is because from a reselling point of view, the one thing you don't want to do is just hit the VAT threshold. You really you won't want to smash straight through it. When you do that, then, as I said, there are schemes out there that's going to make it more beneficial for you. So there's what's called a margin scheme, which basically means instead of you having to pay over VAT on what you sell, it's made on what the profit you make on an item. So that's going to hopefully reduce the amount of VAT you have to pay over. And also there's one called a flat rate scheme, where in some circumstances that can be really beneficial in terms of what you're going to pay over compared to what you should be paying over. So there are schemes out there to make it easier for you and make it better for you. But yeah, I think the big thing is trying to smash through that 85k and not just kind of teeter around it.
One thing I wasn't sure about, like with tax thresholds, like you can earn up to so much and then you pay a next tax on the extra. But with VAT, once you hit 85, I thought maybe do you pay VAT on everything over 85, or is it the whole lot?
No, you're deemed as a tax or a VAT collector at that point. So the whole point of VAT is you become basically another accessory or another VAT collector for the VAT scheme. So what that basically means is everything you sell then currently has VAT on it. So basically it doesn't matter what you sell, where you sell it. There's certain bits that are zero rated, but most of the things that resellers are going to be selling, everything they sell is going to have 20% VAT on. So if you sell it for £120 and you've got that £120, £20 of that you've got to take away from it, put it to one side and pass it to the revenue later down the line. So you're losing 20% of it straight away. But the benefit of it, though, is the fact that you can claim VAT off expenses. So your mobile phone bill and other items out there. And if you do RA, for example, you'll be able to claim the VAT from Asda or Tesco or wherever it is you've bought your items from. So there are those benefits for you, and there are those bits that's going to help you. But yeah, effectively, you're taking 20% of whatever you've sold, and that all of that 20%, you're basically holding it to the revenue, and you're paying it over to on a most of the time a quarterly basis.
Okay. Nice. What you said, there's different schemes and things. Is there one that's best suited to resellers? Because obviously, like, we can't just add. Well, we could just add 20% on, but then we're not less likely to sell it. Is there like?
Yeah.
I know there's a flat rate. I don't know how it works or anything like that.
So there's two. There's the flat rate scheme and there's the margin scheme. So the flat rate scheme itself is about making it really easy on an admin side of thing. So with reselling, one of the biggest issues is the amount of transactions that are going through. So to make it work, you're going to be wanting to churning. Unless you've been able to find some really high value items and you can keep them sustained. Most resellers are kind of looking at trying to do bulk and try and get as many out there. So that means every transaction you've got to record 20%, put it on a VAT return, and they're quarterly, and it can become a right administration burden. So the whole point of flat rate scheme is to try and simplify that as much as possible. So the idea is that in a typical VAT return, you go all of the output that you've done in a year, in a period, so normally 3 months. So all the sales you've made, you say how much of that you've actually had to charge VAT on. You take that figure, and then you go on all your expenses and look at what you've incurred VAT on and take that figure. And in normal VAT return, you take one away from the other, pay that over, that's your VAT return. In a flat rate scheme, the idea is that HMRC has agreed a percentage with you. So all you do is you take your sales, so how much you've sold in a period, and you times it by their percentage. And their percentage will always be less than 20%. And the idea then is it's supposed to emulate that you've gone through and you've added every single transaction together and taken the ones off you can take. Basically, you've done a proper VAT return, if you like. So you've emulated that, but you've shortcut it by doing this one simple calculation where it's how much you've sold in a period times by their percent, which is normally, I think it's 6.5% for a reseller. So compared, you've collected 20, but you're only going to pay not quite be equivalent of 6.5% over. So you can see where you could kind of make some saving there. Cool. And then the other one, as I said, is the margin scheme. And what that looks at is the fact that because most of the stuff we're buying won't have VAT on in the first place, because we're going to go to boot sales, they're not VAT registered, charities won't charge you VAT, them sort of things. Then when you go and buy them from those items, then you can actually only pay over the amount you made on the profit, not the sale. So hopefully then it should reduce the VAT down. The benefit though is if you do auction houses, you get to claim all the VAT back from there. Or if you have import charges, you get to claim that VAT back. So there is some benefits to it.
Yeah, definitely. Would you recommend, like, let's say someone's just started out doing your books yourself versus getting a accountant? Is there a specific area when you would say maybe consider getting an accountant? Because I always said as soon as I'm VAT registered, that's when I'm going to get an accountant. Until then, I'm going to try and do it myself. Yeah. Would you recommend going straight in with an accountant, or?
I think that's a fair assumption, and it's all depend on your own kind of skill set, really. I know some people are absolutely petrified of the idea of putting together numbers and everything like that. If you're confident, and it's all about being disciplined more than anything else. And you use QuickBooks, so you've got that kind of, it's always there available. You can kind of put it in, and you can keep on top of it. If you've got that mentality of being able to do that, then definitely going forward, I think you shouldn't have any issues. There's enough content out there. There's my channel. There's the community are always doing videos. Sam Sells Stuff did one the other day about it. There's always a video out there to help you. So I think there's enough information out there for you to do it yourself, and it is self-assessment. It is almost designed to do yourself. But again, it's about your confidence of, are you confident in doing that? And then and it also depends on how much work you do. One of the popular things we did, especially this year, was just MOTs. So we do we check the books of people, we look through them, we set a video recorder off, and we actually go through the books while it's recording and just say, look, this is wrong, this is right, this is great, well done on this, have a look at this sort of thing. So they could be a cost-effective way to put your mind at rest. So there's kind of always a solution for people out there that need it, and it's just a case of finding what works for them. But I think as soon as you get VAT registered, personally, especially with the margin scheme and everything else that goes with it, you might want to at least get an accountant for the first one. I know Nick said a few times of his story of how he had, I think it was the first quarter or the first 2 quarters, whatever it was, kind of learned what he needed to do and then went off to do it afterwards. So yeah, I think there's definitely those first quarters that might be beneficial.
It's definitely a minefield. I'm definitely going to be looking into it. Adam had a question related to what we just spoke about with VAT. So can you just open up a new company so you can avoid hitting the VAT threshold? And you did touch on that, didn't you? I think
Yeah, it's one of those. It's kind of a bit of a grey area. I wouldn't do it all the time, and I definitely wouldn't do it more than once. But if you're legitimately setting up a limited company for benefits of, you want reduced tax, you want to reduce liability, and you want to reduce everything else, and the added benefit is that you've got that VAT threshold as well. I would just never, admit that it was purely for VAT purposes. I would just say that, legitimately, I'm increasing my business. My business has now got to over £80,000. There's too much liability here for me myself, and I don't want my house to be at risk anymore. So I'm going to go limited company, and that's a sensible way of doing it. And I think as well, another, not to scare people, but another one that happens a lot is Amazon, especially if you're FBA. So FBA can be really nasty when it comes to giving stuff back, closing you down, and then you having to pay all those charges and stuff. So if you're a limited company, that can be a way of protecting yourself against stuff like that. So, just have reasons why it's not just because of that, but it's because of, legitimate reasons of moving on. And then the other benefit, like I said, is you do get to start zero again on that VAT threshold.
Yeah. And someone told me before, like they suggested I should be limited company, because then, you basically, any debt or anything isn't you, it's the company. So less likely to lose things, basically. Oh.
I think that's the dog doing that.
The dog's
so he's going off.
It's fine. So just to clear, I saw a couple of people asked. Obviously, check the VAT threshold. I think it's currently 85,000. Is it?
85, yeah. So, and remember that's on sales, and the real problem about that is it's not just what you've got in the bank account, it's what the actual sale you've made. So again, eBay fees and them sort of fees, that's normally the kicker. That's normally the bit that people haven't taken in consideration. You've had 80k come in your bank account, but you've not realized you've had 6k worth of fees. When you then see your true sales, that's actually over the 85 threshold. So that can be a difficult one. And another one people sometimes forget is sales they make outside of eBay. So your Facebook marketplaces, Depop, whatever, if you're not putting them into the same bank account or whatever it's going to be, remember it's all of your sales that you've made in the year, not just from one platform.
Yep, definitely. Leanne here said, I used Bofix this year to tidy up the mixture of PayPal and managed payments fees section, which I found a bit challenging, and then to file a tax return. The rest of QuickBooks was nice and easy to use.
Yeah, brilliant. Cheers for that, Leanne.
And Frolic Forever started running a business or businesses 22 years ago. Started off with an accountant. I have no regrets, much less stressful, and they save you money long term. I was inspected once, and they handled this as well. So that's another benefit as well. If you do get audited, I guess, do you sort of take over if someone does get audited?
Yeah, so that's it. That's the whole point of you've basically, what an accountant does is they've signed it off. As they've said, they've looked at it or they're happy with it, and they've submitted it on your behalf. So, at the end of the day, it's now their responsibility if there is anything that needs adjusting or something else. Normally, HMRC at that point just want to look at things and want to change things. So.
Yeah. What's this one? Life Refined TV. Would you recommend setting up 2 limited companies, one for eBay and one for Amazon FBA, as it would be so much easier to manage? Plus, you would have to double the VAT thresholds. Aaron's not doing something.
Unfortunately, that last bit's wrong. So basically what happens is if you've got 2 types of businesses, then you have to add them together in terms of what it comes to your VAT threshold, because it's classed as what's called income splitting. So if you had 2 different types of businesses, you'd have to add them up, and if they both go over 85%, then that's fine. The only time that doesn't work is if you've got completely different businesses. So if you had a hairdresser and a reseller, then you'd be okay. But the fact that they're 2 reselling just on different platforms, you definitely HMRC would definitely want to add them together, and that's what your VAT threshold would be. And that's, if it goes over 85k, then you would. When it comes to, is it worthwhile having 2? I don't know. It's one of those, you're adding costs, you're adding extra elements to it. You could be really clever or in the way that you set up year ends and stuff, because one of the nice things about a limited company is you're not just having that 31st of January to pay your tax. It's all based on when your year end is. So you could have it so you have two different year ends around the year. So you could have it so that you've got two different tax points to pay. That could be nice for cash flow. Well, one thing I'd be mindful of is the changes that are coming. So we know that there's going to be an increase into corporation tax at some point because of COVID and the payment and everything else and everything that comes with it. What they normally do that is based on what's called your thresholds, and when you have connected businesses, they normally then reduce those thresholds, so it halves those thresholds. So it could be a case that you're overall paying more. We don't know yet, but that's one of the things where you might want to be careful of. Nice thing of having two, though, is that if FBA, if Amazon was to start charging you an obscene amount of fees because you inadvertently sent whatever you've done and you got yourself banned from them or whatever it is, and they've started to charge you, you have the potential then of closing that one business down and not having to worry about those fees and stuff like that. So
there we go. Hope that's cleared that up for you. I did see one. I saw one earlier as well, similar to expenses, but cash donations. So not necessarily buying something from a charity, you're giving a donation. How does that get put down as expenses? And is there limits or how that works?
No, because again, you purchased it with the intention of selling. So I would still record that as an expense in your business. It's stock that you've got there. It's just stock that never got sold, so you will still get the benefit of it. You just then don't need to put the income of it as well. So there, you're getting your benefit just then.
Okay then. How about giving a one-off donation as well? So say I just wanted to give some money to RSPCA, for example, say £1,000. Can I put that down as expenses? Just I gave a donation.
Yeah, it's not an expense, but if it's got gift aid against it, then you can put it in your gift aid on your tax return, and you can get a benefit. Most of the time, it's only beneficial if you're in the higher rate, though, unfortunately. But it's still something to put down there. They get a benefit as well, gift aid and stuff like that. So
cool. Fubby Chucker, careful I say that. I both have separate reseller businesses registered. Will they be considered separately for tax altogether?
So it all depends on how you've set your business up. If you've set yourself up as two separate sole traders, then you're both going to have two separate separate tax returns to complete each year, and then you can keep them completely separate. If you've opted for a partnership, then they both get combined in one, and then you have two tax returns to complete based on that. If you've got two limited companies, then you'd have two limited companies. So it's all about the structure of your business and how you did it. Just be careful on that one. If you are, as in partner, as in married, technically they're connecting businesses, so this whole VAT threshold could come into play at that point as well. If you're not married, you're under the same house, technically, again, they can, but it'll be less likely that they would ever kind of spot it. But letter of the law is if you've got two businesses and you're connected, then, and they're the same type, then you could be considered over the VAT threshold if both of you are, account to more than 85k.
Oh, so that's together as well, 85 if you're married.
Yeah.
Okay. Is that different if you're a partnership as well? How does that work?
So if you're a partnership, then if that partnership goes above the 85k, you'll definitely be VAT registered at that point, because at that point the business is both of them together. So yeah. Cool.
I'm trying to see other questions or something else. I think I covered VAT, expenses, the grant. Any questions, chuck them in. This is your chance. We've got another 10 minutes if we can get some more questions in.
I know MTD is a big one that's been that's rearing its ugly head. I don't know if you want me to explain that one.
Go ahead.
So MTD, for most, if you're VAT registered, you already know about it. So, and all it means is that your filing of your VAT return has gone from being able to do it on paper and doing it online on HMRC's website like we do now for... Yeah, it's all gone.
I was going to ask you about that. Yeah.
So the idea there is that you have to use a piece of software to file it. So you have to use QuickBooks Zero, whatever it's going to be. And from a VAT point of view, it was fine because, oh, is that me? That's fine. Yeah, so from a VAT point of view, it's absolutely fine. Like, most people were using some form of software, so it wasn't a bad transition. There's a few kind of fallouts from it, but most people now accept it, that they've got a VAT registered business, they have to use QuickBooks or Xero, whatever it's going to be, to get their VAT return done. The problem is, in 2 years' time, in April 2023, MTDs come into all self-employed income over £10,000. So what that means is that going from 2023, you have to use some form of software to file your tax return. And that could be quite a big change to a lot of people, because a lot of people are just happily having a book or having Excel or whatever they're using now to do their figures, and they're not using software. So it is going to be quite a big change and quite a big shock. The other thing is as well, they're not 100% sure on this yet, but they're considering going quarterly returns as well. So you'd have to do your self-assessment on a quarterly basis as opposed to an annual basis as well. So it's one of those, MTD isn't going away. It's definitely happening, despite what some people think. So MTD is definitely happening. We just got to be ready for it. So, try and get yourself onto some form of solution if you can. Try and get comfortable with it now, so that it's not as bad for you going forward.
So an example of that would be QuickBooks, would it?
Yeah. And if you are looking at QuickBooks, I can do a deal on it as well, discount deal as well. So
there you go. I've linked Aaron's channel down below. He does loads of videos, all in depth, things like that. And obviously with the deal with QuickBooks as well, as we're going to have to be doing this soon. Start as soon as you can, really, because it's coming. Adam Ware 17, back to basics here. Hey, I'm new to reselling, starting trading in the next month or so. How should I prepare for my first tax return? Really simple question, but would you prefer to ask an expert? So I thought it would be good to bring it back to basics.
I think my biggest piece of advice for anyone starting out is to have a separate bank account for it. Try and have that that way of having discipline of what's your business costs and what's not your business costs. Having that separate business bank account will just make it feel, or make you have that discipline to be able to understand exactly what you're putting through your business. It's going to make you more appreciative of how much stock value you're going to have and how much money you need as a float, them sort of things. From a purely business point of view, it just makes your life easier. And these days you can set up Revolut, Starling, whatever it is you want to do instantly, so you can quickly get yourself a second bank account, no problem whatsoever. So I highly recommend having that separate bank account. Then it's just about recording your transactions as you go along. Try not to leave it all to the last minute. I know most people do, but if you can do it and you can keep on top of it, then you will find your life so much easier. And that's if you put in a book or if you do an Excel for the next couple of years, that's absolutely fine, but keep on top of it and keep those expenses coming in. And then ideally, if I was you, I would definitely look at some form of software. You don't have to be the world's most expensive software, but software itself just makes your life easier. The idea that you can connect your bank account, so the QuickBooks that we've been talking about, the beauty of it is you literally connect your bank account to QuickBooks, and then it's all about then telling QuickBooks what those transactions are, which is so much easier than having to write them all down or whatever it needs to be. So highly recommend kind of going from there. And then just, use the community as it is. We've got so much resources on there, so many groups on there that will help and make sure that you're going in the right direction.
Cool. Leanne, question for Aaron. When I mentioned on your recent live stream, you said to put super chats on YouTube as advertising, but as I don't have a YouTube channel and not promoting, not sure that was right.
Yeah, it depends on what the super chat was for. Is it, well, if it's kind of to shout out for your business, or it's to shout out to, promote your element, it still is advertising. It still can be form of advertising. The other option is just put it as other expenses. It is technically a business expense. You are technically, you're doing it because you want, the whole point that you're on these channels and you're talking to people and you're having these conversations in the community is because you want to grow your reselling business, and you want to get your reselling business as big and as successful as it possibly can be. So the fact that you're willing to invest some YouTube money or currency or put it into the chats is all about you then still trying to get your questions asked and like you are now. So you're looking to get advice and pushing it forward. So it's definitely a business expense, personally, if it's about, trying to push your brand or make people aware of it, or trying to make people see that you've got your eBay store and people aware of that, then it is an advertising cost. That's absolutely fine. But if you're not comfortable in putting advertising costs, then on QuickBooks Self-Employed, there's the option for having other costs as well, and just stick it there and make sure you do include it as a cost, and you'll be absolutely fine.
Well, I never knew that. So people can put super chats like this. We've got a super chat here. So thanks so much. Long story short, and that can be advertising.
Yeah. Well, that's what you're doing, isn't it? You're trying to raise your brand, aren't you? You're trying to put it there. Make sure you've got your StreamYard in there if you are live streaming. I put my mic off in, and yeah.
There you go. You learn something new every day. So if you want to advertise your ePays, put them in now. But yeah, thanks so much. Long story short, $5. Across the pond. Is VAT added to the item price, or do you back it out of sale price? Can you receive a reseller certificate to not pay VAT at charity shop like USA?
Yeah, so unfortunately for us, it's always added on top. So we're always going to add it on. As I said before, the problem with reselling is you're not going to just be able to add it on top. You're not going to be able to raise your prices by 20% tomorrow, and people are going to be willing to pay it. So what I would highly recommend, or what we've got to understand, is we're going to basically have to absorb the VAT, if you like, and we're going to have to put it on that way around. So yeah, it is added on. And that's the way the VAT works. But for us, we're just going to have to accept the fact that we're absorbing it. When it comes to the certificate not to pay VAT, etc., it doesn't really matter for us, because the charity won't be charging us VAT. They get an exemption themselves, so they only get to charge, though they don't have to charge VAT per the UK government. It's all exempt.
Okay, I just saw a funny comment. I can't find it now. Oh, there you go. Frolic Forever, who is I believe a Bolo taxer, the top one. I'll be claiming George's subscription back. Yeah, I really appreciate it. It's been well received by many. But yeah, really appreciate that. Yeah, literally, that's might blow my mind. I'm going to super chat everyone now. Down the expenses. What forgot? We've got a couple of minutes left. I'll see if we've got any more, and then we'll wrap it up. Yeah, thanks, Aaron, for coming on. I say thanks now before I forget. I'm sure you need a drink after this, after all these on the spot questions. I'm trying to find some. Did see one, and now I can't find it. It was about. There we go. From Rex. Can I count my brother and sister as a business expense for helping me with packaging, etc., and have both of them charge me $12.5 grand, so under the personal allowance, and then gift it back to me?
Okay, so there's a few things to unpack here. First of all, when it comes to paying someone at all, unfortunately, the whole notion of paying someone quote unquote cash in hand is completely gone. So HMRC introduced a new rule called real-time information. He brought it in about 5 years, I want to say now. So since then, there is no paying cash in hand. There's no being able to pay someone without declaring it. If you declare someone that they're being paid $12,500, then unfortunately, although they're below the tax threshold, they're not below the national insurance threshold. So you're still going to have to charge them national insurance, both E's and R's, which just makes it completely not worth it. Now, if you do want to pay them PAYE, there's technically the ability to pay them at $8,500, which will keep them below the national insurance threshold. And as long as the brother and sister don't come at you in terms of national minimum wage or anything like that, then you should be fine. The other option is that they become self-employed and they charge you $8,500. That way, they won't have the ability to that, but they're going to have to be above the age to have a UTR and everything else that goes with it. So yeah, it's complicated, but unfortunately, HMRC can see that, and they will not. Basically, there's no way you can actually do that without incurring national insurance at $12,500. And if you do it, make sure you've got a POI scheme and all that sort of stuff that goes with it.
Or get an accountant. Yeah, I think I'll wrap it up. Yeah, thanks so much, Aaron, for coming on. Yeah, like I said, I get these questions on a daily basis and I can't answer them. And people want me to do videos on them, and obviously I can't, and not my specialty. So yeah, we appreciate you coming on.
No problem.
And again, Aaron's got a channel. The link's in the description. So yeah, appreciate it. Go over, subscribe to him. and learn loads of tax stuff.
Yeah, it's not as boring as it sounds, promise.
Yeah. I'm going to go back on this and watch it myself. Jot down some things. So yeah, there we go. Thanks everyone for joining me. I think I answered as many questions as I could. I've got through a good amount. If I might have Aaron on again soon, maybe, if there is any missing questions or if things have changed, he's always welcome back. So yeah, thanks everyone for joining. Thanks to Aaron. Yeah, we'll see you in the next video. See you later.
Cheers, everyone.